Wednesday, March 3rd, the special session we have today on PPP updates. I'm Robert Theobald, Small Business Ombudsman and Vice President of Small Business Services here at the Arizona Commerce Authority. I'd like to first start by thanking all of our community partners. We cannot do these boot camps without them. They are invaluable, and we appreciate their time, effort, and expertise in all the sessions they've done. So for those that haven't joined us before, the Small Business Boot Camp is designed to help small businesses with less than 20 employees work through the COVID crisis and return stronger than ever. However, any size business is more than welcome to be on these boot camps, and the content is helpful for most businesses out there. It's a statewide initiative supported by our community partners that I listed before. And it is not only just a boot camp, but we have a resource collective website as well, which I will get into here shortly. So the Small Business Boot Camp and Resource Collective website is a great website to favorite, save on your desktop or wherever. On that, you can find the links to register for upcoming sessions. You probably went to that website to register for today's session. You can also find the Resource Collective, and then you can find all of our previous sessions. All of our previous sessions have been recorded and are posted in the archive at the bottom of that page by week, and you can go back through those, listen to any of the topics that you may be interested in or want to go back and rewatch because you watched it previously. We also include copies of the slide decks that were used or other materials that were shared during those sessions. So that archive is an amazing resource. We have over 125 sessions listed on there. And, again, they're available for you to go back at any time and watch. As I mentioned, we have the Resource Collective. And the Resource Collective is the page set up with the tools, guides, and resources provided by our community partners. You can go on to this site and download the information, review it, see what's available for your industry and your business. This is just a sample of some of those resources that are available. As you can see on this list, there's unemployment insurance guides, there's guidance for retail, guidance for barbershops and cosmetologists, construction, manufacturing, the Safe 6, workplace readiness essentials, et cetera. So there's a lot of great information available for you on that site. I'd like to transition real quick into some updates for small businesses. First, we're going to put these links in the chat so you can access them that way. But the Shuttered Venue Operators Grant FAQ has been updated, so we wanted to share that with you. The application process is still not up yet, but some information has been added to the FAQ. So if you're a event venue that was shuttered during COVID, this is some great information for you. Additionally, we're on to share the PPP lender list provided by the Arizona SBDC or SBA district office. They've gone through and updated this to have all the different lenders in the state that are doing PPP loans. Additionally, this is a great link. I refer to it multiple times a day. I usually keep it open in a tab, is the SBA COVID-19 relief options. This is the website that includes links to the PPP, EIDL, the Shuttered Venue Operator Grant, debt relief, and other programs. So it's a great website to be familiar with. And then I wanted to mention, we just finalized putting together a special session from the boot camp next Wednesday on the employee retention credit. We're going to focus that session solely on the employee retention credit. This is a program that is part of the CARES Act and also part of the stimulus package that a lot of businesses don't know about. And businesses can get up to $19,000 per employee in this credit. So there's a lot of funds to be had for small businesses that are willing to go through the work. And so we wanted to have a special session to talk just about that, because if your business needs some additional funds, this is maybe an option to get some of that back. And so we want to walk everybody through that program. So again, that's on Tuesday, March 10th at 9 a.m. The registration link should be up today or tomorrow in the bootcamp website. Additionally, we have our Arizona business resources for COVID-19 at azcommerce.com/COVID-19. This is our main website for all things business related to COVID-19, not just small, but also large business. There's business guidance, financial resources, and other items that can help you as you during this time. We also quickly want to share some of the ACA programs that you can leverage to your benefit. First, there's small business services, and we can help support your business working through the SBA, working with the SBDCs, the Small Business Development Centers, working with SCORE and other no-cost business programs that are out there. We can help you navigate local banking contacts and other programs. Additionally, our workforce division has programs to help if you're looking to hire employees, bring new staffing on board, or upskill your existing employee base. And our Arizona Manufacturing Extension Partnership can work with all the manufacturers throughout Arizona to help grow and develop their businesses through many different programs that they have. Additionally, during this time, there's a lot of people looking to open up a side gig, started their own business, or expand their business into new categories. And the small business checklist is a great resource for those individuals. It is an online interactive checklist that helps identify the licensing, registration, and compliance needs of a business in the local, state, and federal levels. You can find that at azcommerce.com/smallbiz. And then finally, we want to just mention the state's COVID-19 information and resource page, arizonatogether.org. This website has all kinds of information related to COVID-19, and it is there to help support everyone throughout the state. So with that, a quick look at this week's sessions. Yesterday, we had a great session on assembling productive dream teams. If you're looking at ways to provide a better environment for your team or motivate your team, there's great information on that, and you can go back and watch that recording. Today, we have our update on the Paycheck Protection Program. Last week, the White House came down with some updates on it. We wanted to share those with you and with the information we had. So we've got this session today. And then tomorrow, we have implementing project plans to streamline success. And we are looking forward to that one as well. So with that, I want to go ahead and introduce today's speakers. We have Amber Cordoba, the Managing Manager of Consulting Services and Business Education at Prestamo CDFI. Amber has been with us on multiple occasions to talk about PPP. She is one of the experts in the state. Whenever I have questions, I always give her a call. She does a great job, and we're looking forward to her presentation today. And then we have Brian Quijada, who is the Outreach and Marketing Specialist with the Arizona District Office of the SBA. So we're excited to have an SBA representative with us today as well, and he'll be available when we get to our question and answer session later on in the presentation. So with that, I'm going to go ahead and turn the time over to Amber and Brian and let you get started.
Wonderful. Thank you so much. Good morning, everybody. Thank you for having me. Very excited to be here to talk about the updates to the Paycheck Protection Program. Today, when we go through, I'm going to go ahead and share my screen. Let's see, slideshow from beginning. Okay, so I'm not going to go through, typically I go through each each kind of tax form and give you very specifics on how to apply for the program. Today, we're going to focus a little bit more on just these new updates and the changes to the program. But in the chat, I'm going to go ahead and put the, I don't think I can see it while I'm sharing my screen, but I will put a link to one of the former webinars through the boot camp that we've done, and it walks you through step by step what you need to do to actually get prepared to apply, how to look at your tax documentation. So that's really useful if you are looking to apply and you're not looking for updates. So that's one thing that you can do. Okay, so just a quick recap of what the Paycheck Protection Program is. The PPP program is a loan. It's an actual loan. You will have a note. You will have loan documentation that you have to sign. However, it is 100% forgivable if you use it correctly and you apply for forgiveness. So just want to make sure that everybody knows that it is a loan, so your lender will provide you with a note that you have to sign. It's intended to help employers keep employees on staff and to help self-employed individuals with owner compensation replacement. And we talk about self-employed, we're talking about sole proprietors. That can be anything, anybody who owns their business and operates as a sole proprietor. It can be a single member LLC that files Schedule C on their taxes. And it can also be a partnership with K1 income. Again, and we'll talk a little bit more about forgiveness later on in the presentation, but this loan is 100% forgivable if you're meeting the conditions. I will say that 100% as a lender, 100% of the applications we've submitted with full approval for forgiveness have been fully forgiven by the SBA. So the program is working as it's intended to. And they've also eased up a lot of the restrictions on applying for forgiveness. So we'll walk through some of the forms and some of the changes to the forgiveness aspect later on in the presentation as well. If for some reason a portion of your PPP is not forgiven or you forget to apply, it is a fixed 5-year term with a 1% interest rate. PPP is not considered taxable income, so you do not have to pay taxes on it. And the expenses that you use for the proceeds of your PPP are something that you can write off on your taxes. Prior to the legislation that came out in December, right before the end of the year, you weren't able to use the expenses, and there was a lot of not mystery, but there wasn't a lot of clarity around how to handle everything for tax purposes. So that has been clarified, and it's very favorable for small businesses. So most accountants know that at this point, but if your accountant is telling you that you shouldn't take a PPP because it's going to impact your taxes, you might want to revisit that conversation with them. And then in the past, if you received one of those EIDL, the economic impact disaster loans or economic injury disaster loans, and you received that advance prior to this new legislation, that was something that was reduced from your forgiveness, but that is no longer happening. So even if you got an EIDL grant as a part of an EIDL loan, then that's no longer withdrawn or taken out of your forgiveness. So it is 100% forgivable. For those of you that received a first draw PPP over the summer, you are eligible to get a second draw PPP if you meet certain conditions, and that's going to require you to have seen a 25% reduction in one quarter of 2020 compared to the same quarter of 2019. So that is a new requirement with this second draw PPP loan. You do not have to have already received forgiveness or have even applied for your forgiveness for your first draw before you apply for a second draw. So that's an important thing to note. In terms of the PPP, if you did not get a PPP during the first round over the summer, you can apply for the first draw now. At this moment, there's not enough time left in the program for somebody to apply for their first draw PPP, get it, use the covered period, and then apply for a second draw. So if they extend the program, that might be something that's a possibility. However, at this point, if you are just now applying for your first draw, there won't be enough time in the program for you to also apply for the second draw unless it's extended. And you can apply now. As Robert mentioned, there is a lender list that you can go on to the SBA.gov for lenders that are providing PPP loans in the state of Arizona. I work for Prestamos. We are a CDFI and we are accepting applications. You can apply online. So I encourage you to do that because I think we're great. So some PPP rules and requirements so that everybody understands. In terms of eligibility, the program is open to for-profit businesses, 501c3 nonprofits, and 501c6 nonprofit organizations, which are typically membership, leagues, things like that. If you're using the PPP for employees, the principal residence for the employees must be in the United States. For a first draw, you must have 500 or less employees, and for a second draw, it's 300 or less. And you must either pay W-2 wages, where you withhold taxes from your employees' paychecks and you give them a W-2 at the end of the year, or you have to have self-employment income. Eligible uses of the funds is going to need to be 60% of your loan is going to need to go for W-2 payroll, and that's going to be either wages, owner compensation replacement, group health and retirement benefits, and state unemployment taxes. So at least 60% needs to be used for those items in order to get that full forgiveness. The other 40% needs to be used for eligible expenses, and that's going to be rent and lease, utilities. And when we talk about utilities, we're talking about phone, internet, water, electricity, gas. The interest portion of any fixed loans that you have for the business, any PPE, any cloud computing. We'll talk about some more eligible expenses a little bit later on, but you don't want those to exceed 40% of the loan in order to be able to get that full 100% forgiveness. And then the terms of the PPP, it's 2.5 times the average monthly payroll on up to the first $100,000 in wages per employee. And that also extends to self-employment income. So as a self-employed individual, you can only use up to $100,000 in self-employment income. Anything over that has to be removed from the calculation. Now, in the new updates, there was a provision for second draw borrowers only that are in food service and accommodations. They can have a 3.5 time as opposed to a 2.5 time. Your standard industry code has to start with 7.2, and again, that's going to be food service or accommodations. And the term of the PPP, it's an 8 to 24 week covered period. So you use the funds over an 8 to 24 week period. It's a minimum of 8 weeks. That's why at this point you can't apply for a first and a second draw when there's only 4.5, 5 weeks left of the program, because right now it ends March 31st. So the recent PPP updates, the Biden administration announced some changes to the program about a week and a half ago. Now, this is, we haven't received the interim final guidance yet. So basically, the Biden administration said they want to make some changes, and then the SBA actually has to write the guidance and write the rules and provide that to us before we can make any changes from a lender perspective. And this is going to be all lenders across the board. So right now, the one thing that has changed is that only businesses with 19 or less employees are eligible to get their PPPs processed right now. Anybody with 20 or more employees are currently on hold through March 9th. So starting March 10th, next week, we will be able to resume filing those 20 and above. And when we talk about what constitute employee, it's not the FTE or the full-time equivalency. It's any part-time or full-time employee that you have is considered one employee, whether they work 1 hour or 40 hours a week. So it's 19 or less you can go through right now. And the purpose of that is to really support the smallest businesses that have had some traditional barriers to accessing this program. But again, starting on March 10th, anybody with 20 or more employees will be eligible to file. I recommend starting your application process with whatever lender you're going to use so that when the time comes, they can just submit the application through to the SBA and you're not starting from scratch with providing your documentation and figuring out eligibility. Another really neat feature is new Schedule C calculations, and this is something that we're waiting on. We are waiting on the official guidance, but what we have been hearing and what has kind of been shared is that we're going to start using line 7 of the Schedule C, which is gross income, as opposed to line 31 net income. So your gross income is the total amount that you've made for the year minus your cost of goods sold, as opposed to the net income, which is the total amount you made for the year minus your cost of goods sold, minus all of your expenses. The majority of small businesses work to try to reduce your net income as much as possible because that's where your self-employment tax liability lays. So some people may have negative net income, some people have really small amounts of net income, and it really impacts the amount that those individuals are eligible for on the PPP. We've seen people that are eligible for nothing. We've seen people that have $31, $78. So what'll happen is this will increase the ability to receive up to $20,833. And remember that this max of $20,833 is across all businesses. So if you are self-employed and you have multiple LLCs, multiple businesses, through the Paycheck Protection Program, you're only eligible to receive a max of $20,833. So it's important to make sure that you're not exceeding your eligibility there. As of right now, if you've already been funded and your lender has provided Form 1502 to the SBA, this is something that happens behind the scenes and you're likely not going to know about this. This is not going to be retroactive. So if you got funded, right in the beginning of the program in January or early February, there's a chance that you may not be able to retroactively have the change and get the maximum. That's something you need to work with your lender on. If you have used Prestamos as your lender, we'll automatically be recalculating anybody that's eligible. If you're in the process of filing your PPP and you believe that you're eligible for more based on line 7 as opposed to line 31, I'd get in touch with your lender and make sure that they know that you would like to, change the process, because there's some very specific back-end things that have to happen through your lender. On behalf of all lenders and the SBA, I would like to ask for patience as we work through this process. Remember that we have not yet received the interim final guidance from the SBA. So at this point, no lender should be able to fund using these calculations, but they can prepare your application, have your application ready. And then there's going to be some new forms that are going to come out that will have to be signed that will replace the existing forms. So that's something that we're waiting on right now. It's really important just to maintain patience and understand that your lender is going to have to work through a lot of back-end changes to withdraw and get new SBA approval numbers and make changes in systems. So again, try to be patient. Know that if you're eligible for more funding, that you'll be able to get access to it. And then another thing that the Biden administration really put some emphasis on is clarification around the ITIN for non-citizen but lawful U.S. residents. This is something that has always been a part of the program. We've always been able to use ITINs, and lawful U.S. residents have always been able to apply, but there was not a lot of clarity around it. We are looking for some more specifics. There's a lot of gray area and a lot of nuances around this. So we're excited to get some more clarification in this particular area. But what the Biden administration has made clear is that non-citizen lawful U.S. residents are eligible, and that you can use an ITIN if you don't have a social security number. There will also be an elimination of non-fraud felony convictions as an exclusion from the PPP program. So right now, if anybody with 20% or more ownership in a business has a felony conviction, I believe it's within the last 5 or 7 years, it would exclude them from the program. So they are changing that so that if it's a non-fraud, so if for some reason you or one of your the other business owners happen to have a fraud felony conviction, then they'll still be excluded from the program. Another thing is about student loans. We will have more information about this, but if you are delinquent or in a negative status on your student loans, that should not be an exclusion from the PPP program. But again, we have to wait for that final guidance. I know we have a lot of people that are hung up with the SBA right now with hold codes as a result of having student loan delinquency. So I'm excited for the guidance on this. So hopefully we can process those through. From what we're hearing, we should expect the interim final guidance on or around March 6th. That's not a steadfast number or date, but that is, kind of what we're hearing on when we should be getting this new interim final guidance. And we will get a new 2483. That's the application that you actually sign before your file is sent for final approval to the SBA. So there'll be some new forms. Without these new forms, you can't use the new calculation of line 7 on the Schedule C. So at this point, because these forms and the guidance don't exist, no lender should be able to put anybody through using line 7 as opposed to line 31. So we're keeping our fingers crossed that that guidance comes soon so that we can start processing the applications at the higher eligibility rate. So if you're still looking to figure out how to determine your PPP amount, it's going to be based off of two things. One is going to be, do you pay W-2 employees? And again, those are actual employees that you withhold taxes from their paychecks, you file quarterly reports with the IRS and the state. We're not talking about 1099 contractors. 1099 contractors are eligible as self-employed individuals to apply for their own PPP loan. So you're not able to use anything you pay to a 1099 contractor as part of your eligibility. So what you're going to do if you have W-2 employees, and you can use either 2019 or 2020 data, you'll take the total wages you paid for the year plus any company paid health and retirement and state unemployment, and it's going to give you your total eligible wages. Remember that it's capped at $100,000 per employee. The $100,000 does not include the health or retirement or state unemployment. It's just the actual wages paid to the employee. So you add all that up, you divide it by 12, and that's going to give you your monthly average payroll cost for the year. And then you'll multiply that by 2.5, and that's going to give you your W-2 wage PPP eligibility. If you are self-employed and you file a Schedule C on your personal taxes, again, you can use 2019 or you can use 2020. In the past, we've looked at line 31, the net income, but what we're expecting with the new interim final guidance coming out, hopefully in the next couple of days, is that we're going to be able to use line 7. So you would look at line 7. Again, you would divide it by 12 to get your average monthly owner compensation replacement, and then multiply that by 2.5. That will be capped at $20,833 because everybody's capped at that $100,000 per person in wages. If you are a partnership and you file a 1065 tax return, you should be receiving a K-1 as part of your taxes, and you're going to look at line 14A. 14A is for each partner will give you the self-employment income for the partner. And as far as we know, there's no changes to these calculations. It's only the Schedule C's that are changes. So you're going to look at your K-1, you're going to look at line 14A, and you're going to add it together for all partners. Then you'll multiply that by 0.9235 to adjust for the self-employment taxes. And that's going to give you the total self-employment income for the entire year. Each partner will not apply on their own. The partnership applies as the business and includes all of the wages, not wages, but the self-employment income for 14A. Divide by 12, multiply by 2.5. If you have a Schedule C or you have a 1065 partnership, you're eligible for self-employment income. And if you also have W-2 employees, you're eligible for the employees as well. So you would add all of that together as part of that calculation. And then if you are a second draw borrower and you're in food service or accommodations and your standard industry code starts with the 7.2, and you can find that on your taxes typically, you are eligible for 3.5 as opposed to 2.5 times. All right. The other types of documentation that you're going to need to make sure that you provide your lender are going to be articles of organization or incorporation for whatever state that you're organized in. Here in Arizona, you can go onto the Arizona Corporation Commission website and actually do a search and pull down those articles if you don't have your original copy. You'll also have to provide personal information and business information, such as your tax ID number, so your social security number or your ITIN, as well as your employer identification number. Also, it's really important that when you are filling out your PPP application that you provide as much of your demographic information as possible. So the reason for that is because the emphasis of this PPP program is to really reach underserved and minority businesses, and the SBA really needs to be able to track that so they know that they're accomplishing their mission and that they're able to track who they're actually helping. So the types of questions you'll see is around race, ethnicity, and gender at birth. So please fill that out if you can so that the SBA can really make sure that they are serving through the intent of the program. It's a real big mission of the Biden administration as well. And this owner information is going to be required for any owner that's 20% or more for the business. We'll also require a photo identification, and you'll also need to provide proof that you were in operation on or around February 15th, 2020. One of the requirements of the program in order to be eligible for PPP is that you were in operation on February 15th, 2020. The ways that you can prove that are through providing a business bank statement. You can provide an invoice that shows that you had income coming in. You can provide a general ledger from your accounting system if you use QuickBooks, something along those lines, canceled check. You just have to prove that you had some kind of income and expenses going through on or around February 15th, just to show that you were in operation. And then you will need to provide your tax returns so that we can determine eligibility. So again, we're going to be looking for the Schedule C if you are a Schedule C filer. So that would be sole proprietor or single member LLCs. Partnership tax return is the 1065 with the K1s. And then 1120 or 1120S corporation return. Corporations and nonprofits are not eligible for self-employment income, so that will require W-2 wages. So you'll need to provide tax documentation such as the 940 FUTA or the 941 quarterly report. So you will have to provide wage documentation. In order to get access to the second draw, you must have been eligible for and received a first draw, which I know is common sense, but it's one of the questions that comes up a lot. A reminder that you had to have been in operation on February 15th, 2020. There's a question about were you required to have an EIN? Were you required to have filed for an LLC? And the answer that is no. You just had to have been in operation. So sometimes people start their business as a sole proprietorship. You're just running your business as you're ramping things up and you file for those other things later. That's fine. You just have to prove that you were in operation and actually operating your business on February 15th, 2020. For a second draw, you can have no more than 300 employees. And remember, we're talking about part-time and full-time. It's not the full-time equivalency. For the first draw, it's a maximum of 500. Now for the second draw, you have to have seen a 25% reduction in gross receipts in one quarter of 2020 compared to the same quarter of 2019. For most businesses, they saw a reduction, typically in quarter two. And we're talking about calendar quarters. So January, February, March is quarter one. April, May, June is quarter two, and so on. If you did not start your business until the end of 2019, you can use quarter one 2020 as your baseline and compare quarter 2, 3, or 4 of 2020 against quarter one. And that will give you, and it needs to be 25% or more. It can't be less than 25%. It can't be close to 25%. It needs to be 25% or more. It's a hard and fast rule. And then in terms of your lender, you can use any lender that's an eligible PPP lender. You don't have to use the same lender that you use for your first draw. You can look at the lender list that is on the SBA website for lenders that are providing first draw and second draws. It's important to find a lender that you're comfortable working with. There's a lot of lenders that did first draw PPPs that just aren't doing second draws. There's some lenders that are doing second draws, but they're not doing first draws to new customers. So you really have to make sure that you find the right fit for you. Actual uses of the PPP, and I want to make a really important point. the eligibility for determining how much you can receive in PPP is different than what you can use the funds for. And this is one of the big misconceptions that I've run into. Your PPP eligibility, the amount you're eligible for, is only based on self-employment income or W-2 wages, plus the employer paid for health and retirement and state unemployment. A lot of people ask, well, here's my rent, here's my utilities. Those items are not used as part of determining eligibility, but they are eligible uses of the funds. So you can use the PPP funds that you get to pay for operations expenditures, which are going to include your business rent and lease, utilities, mortgage or fixed loan interest only. And that's just the interest portion, not the payment. And remember that you had to have the utilities or the lease in effect on February 15th, 2020. You can also use the funds for operations expenditures like software that your business is required to use in order to meet the virtual demands, cloud computing, human resources and accounting needs. So those are all things that you can use the funds for. Also, if your business had property damage out of a result of the civil unrest that happened in the summer of 2020, and it wasn't covered by insurance or other means, then you can do property damage repairs with the proceeds of the PPP. And then finally, worker protection, and we're talking about PPE. So if you need to provide protective equipment, if you need to buy sneeze guards, if you need to do something like do some extensions or add a drive-through window in order to meet the social distancing or safety requirements, those are all eligible uses of the funds. But remember that non-payroll eligibility use of funds can't exceed 40% in order to get that full forgiveness. You need to use 60% or more, and you can use up to 100% for payroll, but 60% or more needs to go to payroll expenses. And we're talking about wages, tips, commissions, vacation time, sick time, and then the company paid for a portion of health and retirement benefits, and then your state unemployment tax. So again, remember the 60-40 split. At least 60% needs to be used for payroll expenses. The other 40%, up to 40%, can be used for these other eligible expenses that we've talked about today. When it's time for you to actually apply for forgiveness, you will work with your lender, and each lender is going to have different requirements on how they want to do things. I think probably the majority of lenders are doing things electronically, where you'll provide all the documentation and fill out an electronic document. Make sure that you are working with your lender to find out what their specific requirements are. You want to make sure that you apply for forgiveness within 10 months of the end of the covered period for full forgiveness. So the covered period starts the day that the funds are deposited into your bank account, and it's an 8 to 24 week period. When this program first started, it was 8 weeks. And then there was the Paycheck Flexibility Program that made it 8 or 24 weeks. And then this new iteration of the program, it's 8 to 24 weeks. You get to choose your covered period. So remember, you just want to make sure you apply within 10 months of the end of your covered period, that you choose the covered period. So technically you could do 24 weeks, which is 6 months, and then add another 10 months on top. So there's a lot of time to apply for forgiveness. Definitely would recommend not waiting until the last minute, because you want to make sure that everything can get processed in time and there's no hiccups. If you forget or for some reason do not apply for forgiveness within the 10 months, you can still get forgiveness. It'll just be at a reduced amount. So once the end of your covered period hits, and then it's been 10 months, you'll go into repayment with your lender, where you'll start having to pay back the loan. You might have to make a payment and then apply for forgiveness, and then you can get the rest forgiven. So just be cognizant about those dates. It's a little bit different for everybody because it's all based on when the funds were deposited into your bank account. There's new forgiveness applications. If your loan, your PPP loan, was $150,000 or less, it's a very simple one page, and I believe I have, yeah. So it's a really simple one-page document. You don't have to provide any of the justification like you did in the past. There's fewer calculations. You just need to make sure that you have all the records and that you keep them on file for 4 years for employment records and 3 years for all other records. You want to make sure you keep them because the SBA can audit you at any time. So make sure that you keep them handy, or that you have access to them. For loans over $150,000, you will apply with the 3508 or the 3508 Easy, and this is what the 3508 looks like. It's actually, I think it's 13 pages, so it's a much more complicated. The 3508 Easy is a much simpler form, but the 3508 is going to require you to provide several different pieces of documentation. It's going to be the PPP loan forgiveness calculation form that I have shown here, the Schedule A worksheet, and the demographic information form. So you need to make sure that you have all these items prepared, and it's going to ask you to actually demonstrate how many employees you had during the look back period, and then how many employees that you have had over the course of your covered period. It's a little bit complicated. I recommend that you actually take a look at the forms in advance. You can just Google SBA form 3508, 3508 Easy, or the 3508S, based on what your requirement is going to be. And again, anything under $150,000 is going to be that 3508S, which is just that one-page document. If you have $150,000 or more, you're either going to do the 3508 or the 3508 Easy. And the requirement to use the Easy as opposed to the traditional 3508 is going to be based on whether or not you qualify for the safe harbor. So the safe harbor requirement is that you did not reduce the annual salary or hourly wages of any employee more than 25% during the covered period. And that's compared against the most recent full quarter before the covered period. And you will also have to attest that you did not reduce the number of employees or the average paid hours between January 1st, 2020 and the end of the covered period. So this is the exception, is that if you had a reduction that arose from your inability to rehire individuals, so if you temporarily had to lay them off, you tried to bring them back and they wouldn't come back for whatever reason, or you just couldn't refill those positions, maybe because the workforce, you just couldn't get the skilled labor that you need, or whatever the situation might be. The other option is that you didn't reduce and that your business was unable to operate at the same business activity levels because of a government-related guidelines. So for example, here in Arizona, if you were a gym, your business was shut down for quite a while. And so that impacted your ability to run operations so that you would qualify under these safe harbors. So if you qualify under the safe harbors, you're eligible to use the 3508 Easy as opposed to the 3508. And again, these two forms are just for borrowers who had $150,000 or more. I know this is a complicated topic, so feel free to reach out with any specific questions that you have, but most of this information is right on the different forms, and you can Google them and get access to them, and it's really helpful. So quick recap, when and how to apply. You can apply now. The program is open to first and second draw applicants through March 31st, and that means that your application has to be complete with your lender. You have to sign the 2483 application, and it has to be submitted to the SBA by March 31st. So please do not wait until March 31st to apply. It's likely going to be too late. You want to make sure that you have all your documentation prepared and all of the information ready to provide to your lender. You can look online on the SBA lender list for the state of Arizona. You can also apply through our organization at prestamosloans.org/PPP. Eligibility again is going to be based on employers that pay W-2 wages or self-employed individuals that have positive net income. We're anticipating on line 7 of the Schedule C, and for 1065 partnerships with K1s with positive net income on line 14A. First draw requires 500 or less employees. Second draw is less than 300 employees, and you have to have seen that 25% reduction in 1 quarter of 2020 compared to the same quarter of 2019. Forgiveness, the PPP is 100% forgivable if you use at least 60% for eligible payroll costs. Remember that you can use up to 100% for payroll. The purpose of this program is the payroll protection. And to clarify, self-employment income that you pay yourself in draws, if you're self-employed, counts as that payroll portion. Make sure that you are using no more than 40% for other eligible costs, and we already talked about what those were, but the rent, utilities, PPE, cloud computing, those types of things. Again, self-employed can use Schedule C, 100% for owner compensation replacement draws. You will want to make sure that you're using at least a 10-week covered period in order to receive full forgiveness if you are using 100% of your PPP for owner compensation replacement. And remember that the cap is $100,000 cap per employee, including self-employment income. And so that means that the max that you can get as a self-employed individual is $20,833. And then finally, you need to make sure that if you have $150,000 or more for your PPP, that you're maintaining your full-time equivalency headcount, or you meet one of the safe harbor requirements, which are talked about in those 3508 forms. There's a lot of additional resources available. Your lender should be able to walk you through the process and answer questions. We also have something called the Prestamos Prime program that is sponsored in part by the SBA, where we provide no cost assistance, and we can help walk you through your PPP application, even if you're not using us as a lender. We also do a ton of different types of webinars on our website, including PPP updates. We'll be doing one as soon as we have more information about the interim final guidance from the SBA. And then we are also in process of launching a SBA sponsored Women's Business Center. Should be sometime this month that we're offering our virtual programming. But again, these are all free, no cost business assistance for eligible businesses in Arizona and Nevada. We also do other types of lending. If PPP isn't enough or isn't for you, you can check out our website to learn more about that. And then that is all I have for the presentation. And I think we're going to go into the Q&A session now.
Excellent. Thank you, Amber. We have a number of good questions in the Q&A box. So if you want to pull it up and just start working through them, and Brian, you can help answer some of these potentially. But some of these are different types of questions we've heard in the past. So it's good to see some different questions coming up. So Amber, I'll let you start.
Great. So the first question I have here is, do we have to pay AZ taxes on the amount forgiven? The forgivable amount, the PPP, is non-taxable, so you do not have to pay taxes on the PPP loan. If I got an EIDL loan and no PPP, can I apply and use PPP monies to pay the EIDL? Brian, this might be one that you want to pop in, but from my understanding, actually the answer to that question is no. PPP monies need to be used for eligible expenses, so that's going to be payroll, and it's going to be the other eligible expenses we talked about. Paying off your EIDL loan is not an eligible use, I guess, except for the interest-only portion of the EIDL loan. Is that how you would explain it as well, Brian?
So there is some gray area on this. Technically, you can utilize PPP funding to pay off some of your EIDL, but this is where the borrower needs to work very closely with their lender. Number one, the expenses used cannot overlap the PPP funding with EIDL, number one. And number two, also what kind of cash flow impact that may have on the borrower. So a PPP is going to have a 5-year and if it was received before June of last year, a 2-year term at 1%, whereas your idle is going to have a 30-year term. So your payment on an idle is going to be much lower than what it would be on a PPP. Now we're just talking in the event that that portion is unforgiven. So this is where I defer them back to their lender to ensure that they go through the expenses that you utilized for each loan to ensure there's no overlapping and ensure what if they're going to be forgiven. If not, remaining as is would probably be more beneficial to them with a longer term.
Yeah. Yeah, remember that idle loan is a 30-year loan as opposed to the PPP, which is either a 2 or 5-year loan. So it's a much quicker payback on the PPP versus the idle. Okay, next question. What amounts from a partnership return and Form K-1 can be used for the PPP application calculation? Are there certain line items on the K-1? Yes, you're going to look at line 14A of the K-1, and you'll add all of the K-1s together, and it's just line 14A, and that will give you the total amount for the year. You want to multiply that then by 0.9235 to adjust for self-employment taxes, and that will give you your total annual wages or self-employment income. Divide by 12, and you'll either multiply by 2.5 or 3.5. Can you include manufacturing expenses? I believe that's no, unless I'm incorrect, Brian.
No, I believe that's a no as well.
Yeah, it's not listed on the eligible expenses. Does this mean that I must have been generating income by February 15th, 2020? It's been in existence since 2006, but I stopped paying myself a salary in 2017. The way that in previous webinars, the SBA representative has explained it is if you had income or expenses and that your business was in operation, that's the qualifier, that you had some kind of income, some kind of expenses, that you had, some level of business operation. If your business was dormant for a couple of years and then you picked it back up again and you want to do a PPP now, that probably doesn't make sense. What if you laid off your employees until the last 6 months and haven't been paying myself on payroll, have just been taking small draws for both? I'm not 100% if this question is about the calculation or what to use the funds for, but if you laid your employees off and you brought them back, you might want to look at your 2019 payroll as opposed to your 2020 payroll and use whatever year was higher for your W-2 wages. And you want to make sure that you're retaining the same number of employees in order to meet the requirements of the program. So this program isn't meant for people to lay off all your employees, then get the PPP based on those employees, and then not bring them back or not pay employees, if that makes sense. How does unemployment compensation factor into PPP? From what I understand, while you're receiving PPP during your covered period, you want to stop or pause any kind of PUA or unemployment benefits that you have. You should not be taking both PUA and PPP at the same time if you're self-employed. Now, if you yourself are taking unemployment because you're not paying yourself, but you're still paying your employees, you can use the PPP to pay them, but you should not be on PUA or unemployment and also be taking owner compensation replacement, self-employment income replacement through the PPP. Here's a question about the 25% reduction in gross receipts. Just trying to read through this one. So the reduction in gross receipts, this is a really great question that I can't answer because I'm not one of the ones that made the rules, just so that everybody understands about the rules. So the question is, the entire intent of the PPP loan was to keep employees on payroll. Why is the reduction in gross receipts and not on net income? This is part of the legislation. This is the way that it was written. This is the way that the SBA has taken the law and implemented it. So that's why I can't answer that question for you, because I didn't write the law. But you want to look at, you can look at quarter over quarter. So you can look at 1 quarter of 2020 compared to the same quarter of 2019, or you can look at the total gross receipts for 2019 compared to 2020. So there's 2 options there that you can look at, but you have to have seen that 25% reduction in gross receipts. And remember not to include any PPP in your gross receipts because it's not considered income. Is there a requirement that your business be in operation for a certain time period before applying? I purchased a company as of August 2020. Can I still apply for a PPP for that business? There's some very specific rules about change in ownership. If the business was in operation on February 15th, 2020, you purchased it in August 2020, there are some specific rules that I would encourage you to look up. But you should be eligible if the previous owner did not apply for the PPP. If they did apply for the PPP during the first round but didn't the second round, then you would be eligible to do the second round if you maintain the same employees. Brian, is there any other rules around that that you think are pertinent to kind of mention?
No, those are the general, that's the general structure for it. Anything else that's case by case for the business, the lender would approach it, but that's just the general norm for it.
Great. Can you apply to more than one lender? Yes, you can, but I would not recommend it, because what happens is you're filling out applications with multiple lenders. Everybody's trying to submit it through to the SBA, and you're going to see a bunch of rejections, and it's going to make it very difficult, because you're going to have to try to figure out which one of the lenders actually got you the SBA approval number. The backend technical system, when you're applying multiple times, there's a lot of technical issues and glitches that are happening, and it could end up causing quite a bit of delay in your ability to get the funds. I would recommend that you pick a lender that you feel comfortable with and not applying to a bunch, because it's a lot of wasted work on a lot of lenders, and you're possibly taking away an opportunity for another small business to get access to this program if you're doing so. So that's my personal recommendation. But from a rule standpoint, yes, you can. If you give accommodation or other benefits as part of service to employer, can this be included in the claim? I don't believe so. Brian, if they do accommodations or other types of stipends, do you know if that's considered part of the compensation or benefits?
No, I haven't read any guidelines pertaining to that. It's just your general payroll costs.
Yeah, I think it's just wages and just standard compensation, and then the health and retirement that the company pays for, and state unemployment.
Correct.
Is there a Schedule C for an LLC too? So an LLC can file their taxes in many different ways. They can file as a Schedule C, a 1065 partnership, or as an S Corp election. So it's all based on how you file taxes for your business. There's 3 different tax forms that you can be using as an LLC. If the business was in operation on February 2020, but I purchased in August, I think we already answered that question. It just depends on whether or not the previous owner applied for PPP, Draw 1 and Draw 2, and if the business was eligible for PPP. But it's all business-based, not owner-based. Do you have to have reduced income of each of 3 months? It's the whole quarter. So you take the total amount for the quarter and compare it to the previous year, the same quarter. And it's not per month, it's the total 25% over the 3 months together in the quarter. And remember that it's calendar quarters. You can't just pick any 3 months.
Amber, we're getting close on time, but there's another question I see in here that definitely want to touch on real quick. It says, if I got a loan deposit in April 2020, that's the beginning of the 10 months plus 8 to 24 weeks. Can you answer that? I think they've got the timeframes flipped on that.
Yep, it's flipped. So the covered period starts when the funds are deposited into your bank. And the covered period is 8 to 24 weeks, and you get to choose the length. And then after the end of the covered period, you have 10 months to apply for forgiveness to be eligible for 100% forgiveness. If you don't apply until after the 10 months, you can still get forgiveness. It just won't be at 100%. You'll have had to make your first payment until you apply. I think there was another question again about the S Corps. So if you're an S Corp, you are not going to have self-employment income because you're considered a corporation. You need to use W-2 wages. So if you're an S Corp or if you are a nonprofit organization, it's solely based on the W-2 wages that you pay.
Excellent. Well, we are up on time. Amber, thank you very much. Brian, thank you very much. We appreciate your expertise on this topic. Just a reminder, folks, if you go back into our archive, we have today's session, but we also did sessions in week 37. That's the session that Amber walked through the application process in a little bit more detail. And then as well in week 38, we had another session on Paycheck Protection Program. So both those weeks, you can go back and review those. We answered a lot of questions in those as well. A lot of the information was also shared in today's session. But those are the most recent. If you go too far back on the PPP webinars from any person that's done them, oftentimes the rules have changed. So you always want to look at the more recent versions of it based on the rule changes that have come up. But those are out there available for everybody. Again, as we wrap up, I want to thank Amber and Brian for being with us today and sharing their expertise. If you have any questions, feel free to reach out to Amber and her team over at Prestamos. They do a great job, and we appreciate their partnership with us on the presentations. With that, just remind everybody we have our boot camp tomorrow morning, 9 a.m. Please feel free to join us, and then we have our special session next week as well on the employee retention credit. So with that, have a great rest of your day, and we look forward to seeing you on future sessions. Thank you.
Thank you.